G'day, Rudy here. It's another update on uranium. So, you know I'm bullish uranium. My view is it will be the long-term solution, clean, powerful, more impressive than solar and wind. I think coal and gas will be in the middle. Sooner Elbow wakes up, the better. So for those that haven't seen, this is the uranium spot price, the rounded bottom. I love the rounded bottom. So we have price targets, not overnight, up to nearly got there, so it should get back up here again. But this is, I just think, a great long-term investment. So we've broke the declining wedge, and just this week you can see with this nice little rounded bottom here off the 20 period, so this would be the 20-week moving average. And when we see the spot price, the sprott price, we'll see that's kicked. Okay, so how do we get into it? So there's some ETFs and there's some physical shares you could buy. So Urnm, we've had a few goes. The first one back here in beginning of June, then another one here. So this was our buy zone down here. It looks like it's had enough of down here, and it's ready to move on. So if we look at the companies underneath it, so Cameco, so this is the king of uranium stocks. It's basically, is it the world's largest or second largest? Second largest producer of uranium, but they've merged with a place called Westinghouse. Probably heard of them. So they build the nuclear reactors. Westinghouse actually went broke, for those of you who didn't know, trying to do it, and then they've learnt the lessons, got their smarts together, and they're now basically vertically integrated. So chart wise, consolidating at the highs, next move is up. Then we've got Kazatomprom. So this is the world's largest producer of uranium. So break resistance, back down test, so that's on its way up. And this is an interesting one. This is the Sprott Physical Uranium Trust. So Mr. Sprott, he's a bit of a billionaire, this guy. In the resource, he's well known. So this is physical uranium. He just went out and bought a whole stack of physical uranium. So this is so people are paying up. So it hasn't followed. So the spot price will probably follow this. Now the other companies. So as we go down this list here, it's lesser weighting in the Urnm ETF. So this is Energy Fuels. So they look like they're going to have a crack at that resistance. So not bearish. Now for some reason Deep Yellow, which is one of our fellas, gets a gig up here. So they're we've got the rounded bottom too, coming back to test support now, so that doesn't look too far from a bottom. Alright, so now there's another ETF, Atom. It's got Cameco as top holding, a quarter of it, but it sort of focuses on companies that produce the reactors. I wasn't that keen when this came out. So the two major companies, there's this SMR, although it looks like it's coming down to test support. Now why I say I don't really like, because Westinghouse have already done it all, so these guys are trying to still develop the reactors, so it's not proven yet, in my understanding. And Oklo is the other one. So that's just breaking a declining wedge, so that's looks like it's coming back down here. So from a price point of view, if Atom came back down here, started turning up, then yeah, So how do we help? So this is actually Urnm over Atom. So Atom had been outperforming, but it's Urnm is now I think that will come back up here. So that'll be Urnm outperforming Atom. Okay, and then there's another one, Urnj. So if you've got access to American NASDAQ ETFs, this one has just got, so this is your mid-tier uranium producers, so you don't see any of the big names in there, but Paladin's at the top holding, then you got NextGen, Denison, we'll go through a few of them. But that looks really nice too. So if we have a look, actually if we have a look at, so Urnj over Urnm, so Urnj is broken the wedge, so technically that says Urnj is going to outperform Urnm, which is usually what happens in a bull market. The smaller ones, the big boys run first and then the mid to small caps follow. So this is Paladin, this is our fella. So he's, I don't expect these things to shoot up, but if you're interested, they're long-term holds. There's no reason why they can't get back up to these highs again. So it's a matter of just, like, you can see it's forming a bottom here, so anywhere in this zone was a buy. So that looks fine. NextGen Energy, so that's in Urnj. They're another uranium developer, bouncing off support, so it looks good. Uranium Energy, there's that rounded bottom. So that's on fire, consolidating at highs. So it's not going down, that's for sure. Denison Mines. So that's potentially forming a bit of a bull flag, or come down here, it looks like more of a bull flag because it's coming down a bit slow. So that looks fine, doesn't look bearish. Then our fella Boss got kicked in the guts like CSL today. So it's a daily chart. This is an hourly chart on Boss. So if you're trying to work out when to buy, so it's $1.70. I mean, ideally what you want to see is that higher highs and higher lows. Well, see, that was a good effort. Okay, so that's what's that, $1.80. So for safety, you want to see it past $1.80 because someone whacked it when it got there. Could be the short sellers trying to go short again, who knows. But long term, I think they'll get their act together and sort out their grading stuff. And then another subscriber said, why aren't I talking about Lotus? So here I am talking about Lotus. So Lotus ASX play, obviously. So they're about to come into production Q3 25. So that's now. So technically it's at support, hasn't broken the declining line there. But if you're a believer, yeah, you'd buy that. It's coming into production, so I think. But ideally, you want to see it. Or the magic. Yeah, you need 20 cents. It's funny. You have 20 cents and $1. Always 10 cents is the big one. Then 20 is the next, and then sometimes 50, but $1's the big one. All right. So that's your uranium wrap. If you know anything more than I know, let us know. All right, see ya.